Welcome to Kristen's Nuggets of Knowledge. I'm Kristen Maka with Futurity First Insurance Group. I decided that today is such a gorgeous day, I'm going to share the sun and fun with everybody out in the garden. Hopefully no spiders crawl on my head. The question that we're going to be answering today is, how much life insurance should I have in place? Now there's a lot of different answers out there for you. I'm just going to show you the way that I look at life insurance. Are you ready? Let's go, shall we? When I talk to people about life insurance, I want to know what their life insurance for them is going to mean for their family. So is it just going to be a lump sum, or do they have a purpose in mind? Do they want to maybe take care of current debt? Do they want to look at their family's future? Do they want to give them a better future than what they have? Do they just want to replace a monthly income? These are the things that I make sure that I ask my clients. So when we're looking at this needs-based way to calculate life insurance, I look at most people want to make sure that their family doesn't have any debt, and then they also want to make sure their family has some kind of a monthly income coming in for them. So when we look at the debt side of things, what types of things do we want to look at when we're talking about debt? Well, first off, we want to make sure that our final expenses, the cost of our funeral, is taken care of. I don't ever want to be passing that along to my family at all. And then any debt that you've accrued. So whether there's car payments, house payments, are there still student loans out there that would be passed along to your family? You want to make sure that you get all of that debt taken care of. And then any future debt that you may want to be looking at. So whether it's putting money aside for your kids' college, putting money aside for a particular charity, what do you want to make sure that your family has? Do you want to buy them a beach house in Hawaii? I don't know. And then after that is all said and done, then you want to look at the income side of things. After all the debt is taken care of, how much does your family need on a monthly basis to live the life that you want them to live, or that they want to live? Sometimes they stipulate how much money they want. But is it just taking care of the basics, like your utility bills, phone bills, and food bills? Or is it adding on extras like money for sports or clubs or entertainment of some sort? So that's what we want to look at in today's example. So let's go check out what an example is going to look like. For our example today, we are going to look at breadwinner Sarah. And she doesn't want to leave any of the final expenses to her family, so she wants to have a nice cushiony number of $20,000. Her and her husband still have a little bit left on their mortgage at $100,000. They do have at least 3 vehicles and a little bit of debt associated with that at $20,000. They do have a constant fluctuating credit card debt of $5,000, and they have not kept any student loans. They've already paid all of that off, so we're just going to put a nice big line through this. But they would like to have a large bucket of college funding set aside for their 2 kids at $100,000 each, so for a grand total of $200,000 in college funding. And because Sarah loves to be able to contribute to her charities, she's going to set aside $5,000 for each of her 3 charities, which brings us to a grand total of $360,000 in debt. So when we're looking at income, when we look at a monthly need, how much is the family going to want to have for all of these potential bills, as well as, personal entertainment? So we're just going to put a $4,000 in here, which annually will equate to $48,000. And I'm going to put 6% interest rate on here. I will explain that in just a bit. And that brings us to $800,000. So when Sarah passes, there's going to be these two buckets of money. So this first bucket of money is just going to go straight into paying the debt. And the second bucket of money is going to go into some kind of an investment. And we're going to conservatively look at getting and earning a 6% rate of interest. And with that annual interest, it will break down into this need of $4,000 for the family. So when we're looking at then our total, we have our 36 and our 800 to bring us to $1,160,000. Now, of course, life insurance comes at price points, so you can either look to get this complete amount or look to round up or round down. And that is our example of how to calculate your life insurance needs. Thank you for tuning in today. I hope you learned a little nugget or two about how much life insurance you may need to have in place. If you would do a solid favor for me and click that subscribe button, I would appreciate it. That way you'll be notified next time I have a video coming out. Thank you again for tuning in, and I hope everybody has a very safe, long holiday weekend this weekend. We'll see you next time. Bye.